Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around about 10:45, 11 o'clock, markets are trading in the red and at the lower level of the trajectory that we had mentioned last week on Monday. Before I go any further, let me give you certain levels on the Sensex, Nifty Bank, Rupee Dollar equation, as well as crude oil. Sensex is down about 365 points. 71,250 is the level on Sensex. Nifty is trading down about 102 points. 21,680 is the level on Nifty. Nifty Bank or Bank Nifty down about 408 points. 45,230 is the level on Nifty Bank or Bank Nifty. On the rupee dollar equation, 2 paise strength in the rupee against the dollar, and the level is 83.01. On the crude oil front, well, this is where a little bit of a positivity is there compared to last week. This morning, crude oil is trading lower. $81.81 to a barrel is Brent, and $76.38 to a barrel is NYMEX. Elevated level, though there is a little bit of correction, and the anticipation is that this would be possibly the range. So let me first start off with the markets, what our estimates and expectation this week is. If you recollect, friends, last week we had mentioned a range on the Nifty spot, 22,000, 22,100 on the higher side, 21,700 to 21,600 on the lower side. So we are possibly trading at the lower end of the lower band that we had mentioned last week, 21,600, and the level is 21,680. We believe there would be a little bit of buying coming in at closer to maybe about 21,600. Now it all depends upon what the situation and the news flow is in form of the earnings season. Third quarter this week possibly will be the last week of meaningful names coming out with their earnings. Week after there will be lesser known names from possibly the small cap and the micro cap universe who will announce the numbers, so no meaningful impact from the earnings front is what we can expect from next week onwards, and markets will possibly take the cues in terms of news flows locally as well as globally. Stock specific moves as far as news flows are concerned will definitely be visible, but one will have to wait and watch those news to unfold. We may possibly bounce back from the lower levels of somewhere close to about 21,600, 21,650, very close right now Nifty to those levels where the correction has sipped in terms of profit booking, largely because of triggers, absence of triggers, and of course in terms of market movement, there would be a little bit of top heavy feeling as we make any kind of meaningful recovery from these levels. So our view is that we are in that same range that we were last week. Remains to be seen whether we are able to hold out 21,600. If not, then maybe plus minus 50 odd points could be seen on the lower level for the Nifty, as well as that translating into the Sensex as well, and maybe a little bit of pressure in the Bank Nifty or Nifty Bank. Recovery, if any, would be very marginal, and I think intraday recovery is what we can expect. But don't expect this range to be taken out on both sides. 21,600 plus minus 50 odd points on the lower level, and possibly 21,800 to 21,900 being the higher end of the zone where you might see some kind of resistance coming into the market. On the rupee front, well, we can see sub 83 levels against the dollar, but I think a lot will depend upon what the demand and supply situation is as far as the dollar is concerned, in terms of weakness and a little bit of strength in the rupee. On the crude oil front, news flows driven, more of news flow event, no specific demand surge is what we are witnessing, and that might keep the crude oil prices both on the NYMEX and the Brent front under check. If we move up maybe closer to $85 on the Brent and maybe about $80, $82 on the NYMEX, then there'll be a little bit of concern depending upon the crude oil requirement as far as our country is concerned and the imports that we do. And at the same time, rupee dollar equation will also be playing a crucial role. So these two factors may possibly have its impact on the equity market on immediately short to medium term basis, but don't see much elevated level. on the energy basket, that is Brent as well as NYMEX. Coming back to the market, I think we have possibly seen most of the earnings season in terms of third quarter earnings. Like I mentioned, this week will be curtains downs for the third quarter earnings, and to summarize the third quarter earnings, well, it was good to see no major dark spots and optimism in terms of upgrades with respect to certain sectors and stocks will definitely be visible. Time will tell us as to what are those sectors and which are the companies where the upgrades have taken. In the recent couple of weeks, friends, we've seen public sector banks and public sector companies run up and then witness a little bit of profit booking. But I think there are interesting names in both these financial as well as manufacturing or services side is concerned as far as public sector banks are concerned. So some public sector banks looks interesting. Some of those names which are associated with defense in the public sector are looking very interesting. And as always, whenever we interact with you every Monday, we give you two investment ideas from a long-term point of view. The focus is on the electrical side and power generation side. So the first name that we would suggest in terms of long-term investment idea is Finolex Cables. Not a very common name that we speak about in the market, Finolex Cables, but over the last maybe about a year, if you actually go to see, on fallback of earnings, this company has delivered a good set of numbers, and in terms of business commentary, it's very, very strong. And we expect the company to deliver on the earnings, and thereby we can see much more elevated levels going forward from here on. This company is basically into making cables, wires, electrical peripherals, etc., industrial goods applications, etc. And we believe that long-term investment into Finolex Cables would be a good alternative in terms of long-term investments. The second one is, again, I just mentioned about public sector companies, is from the power generation pack, one of the largest power generating capacity, and the name is NTPC. We've seen huge reforms in the power sector, and I think these are translating into a lot of positivity in terms of earning visibility for the power generation companies. Not to forget, if India has to reach towards that next $1 trillion economy, other than banking, I think power generation sector has to contribute to a great extent. And the kind of new power generation capacities that has been lined up by the government, both with respect to solar, wind and hydro, we expect more positivities to come through. Realizations have improved for power generating companies primarily because of the improvement of state of financial and balance sheet of State Electricity Board, and power consumption demand across the country is going up. So we believe NTPC could be a good alternative idea in terms of power generation. Friends, don't try to rush into these two investment ideas from a short to medium term point of view, because these are not meant for short to medium term. These are all long term investment ideas. And by that definition of long term, you need to have at least year and a half plus kind of a time horizon. If you decide to invest into these two companies, please do a little bit of homework before deciding to invest. And disciplined investment into these two companies is what we would advise. In parts, start at current levels, and as and when you get dips, you can add on to both these investments. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of your health. Bye-bye.